Yo, 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 yo! Is this too laid back? Base, how low can you go? Death row, what a brother know! Once again, back is the incredible Rhyme Animal, the incredible D, public enemy number 1. 5-0 sit, freeze! And I got numb. You ready? You guys ready to go? Can I tell them that I never really had a gun, but just a wax of the Terminator X-Spun? Now they got me in a cell because my records ain't sell because a brother like me said, well, oh yeah. Hey, let's go, yo. Let's go! Thank you, Ron. Hey, what happened to it? Hello, hello, hello. I got 98s booming in my trunk with funk. All you punks can't stop my dunk. Hey, man, I grew up in the 90s, what can I say? So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please be small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, hello, hello. Oh yeah, how's your mum? Tell your mum. Hi, my name is Wayne. I'm a currency trader just like you. I just happen to be doing this for a little bit longer. I started my career at NASA and Apple Computer, which I bought stock at $6 a share. Yeah. Went to Cisco Systems. I've managed several startups. And then I threw all that away to become a currency trader. You should have seen my wife when I said, hey, because I was just promoted to vice president of my firm. I had been there for maybe a year or so, and I was really enjoying what I was doing. I really thought I was doing what I was going to do for the rest of my life. I was a venture capitalist overseeing 300 people. They just gave me a whole new department. Everything was golden, so I quit. Yeah. And she's like, dumbass of what? And I said, I quit my job. Dumbass of what? So anyways, yeah, I quit my job and became a currency trader. Started trading out of my home office from 10 o'clock at night to 10 o'clock in the morning. So you and I are on the same path. I'm not brilliant. I have half a brain and I have a ridiculous, sickening work ethic. And I'm simply about 15 years ahead of you. 10 or 15, depending on when you started. So there's nothing magic about me except I work really hard. And I try and I care. So I'm here to share the techniques that I use. Things like technical analysis, fundamental analysis, but with the overriding goal of putting together trade plans and then trading those plans. So I have to have a bias. From that I create a strategy. From that I create tactics. And from that, you either make money or lose money. Your losers should be small. Your winners should be big. Well, how could your winners be bigger than your losers? Well, you've done some analysis and you're trading in the direction of the trend. Not crazy, ridiculous. This is something that you got. This is something that you can do. And I'm here to help you do it. Sort of your guide, your mentor, your boss, whatever you want. A friend, a confidant, a comrade. If these webinars are helping, then please take a minute of your time. Visit tradersway.com because they are the sponsor of these webinars. They are bringing this to your life. So make sure you go to tradersway.com, open a demo account. From there you can download MT4 and you can play some sample trades and you can check out the execution speed, the spreads, and the amazing swaps. And from there, hopefully they can earn your loyalty and respect so that when you're ready to trade real money, you'll choose Traders Way as the prime broker to your successful Forex trading business. So the way I look at it is they're investing into your success today, your future success today. So when you find it, make sure you pay that back. Tradersway.com. All right, Thank you for the, and thank you for the likes and the comments. It simply tells YouTube that this is quality content. So if you value this community, make sure you do that. Let YouTube know this is quality content. All right. So what do you want to do? Same thing over and over and over and over and over and over again. Well, welcome to the job, man. Fall in love, right? Fall in love. Get in the canoe or get in the water, one of them, right? So the same thing over and over and over again. That's called really a bias if you're thinking about it, right? If you're a bull, you're a bull. If you're a bear, you're a bear. If you're both a bull and a bear, then you really don't know what you're doing. Okay? And that's not going to work out very well if you don't know what you're doing. The interesting thing is if you have a bias and you're basically wrong, whatever that means, because the market always becomes bullish or bearish at points, but maybe on the time frame that you're looking at in the moment, you might be quote unquote wrong in that particular moment. But if you stick with your bias and you're consistent in a market that can be inconsistent, then by the end of the year, you will be profitable. Okay? You got to get that. I would write this down. My job as a currency trader is not to try to be right. It's not to try to beat the market. It's not to outsmart anybody. My job as a currency trader is to be consistent. And from that, I can plan. Okay? So you flip a coin. I really don't care. Flip a coin. Okay? You can have this opinion where like the US dollar is worthless and it's going to be toilet paper one day. So when I first started trading, that's what I heard all the time. People were writing books on it too. The US dollar is worthless. The euro is going to become a reserve currency. The United States is going to go into a caveman state. It's all over, blah, 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 blah. It's worse than hate speech. But they have an opinion. Okay? And the interesting thing about that is if you back an opinion up with actual tactics and strategies, you'll probably do all right. So I don't care if you're pro-dollar or anti-dollar, it doesn't matter to me. You'll probably make money. You could be pro-yen or anti-yen. Doesn't matter to me. You'll probably make money either way. So I want you to drink that Kool-Aid and stop trying to beat the market. Okay? And start creating a strategy based on a bias. When you get that through here, your trading will dramatically improve. Okay? You got that? So let's do this. Let's start WTI. I was hoping for up or up or up. This is today's bullish buy zone, which we talked about yesterday. Well, Jimbo says your profits are subject to your bias, which you do control, right? But I take it actually a little bit step further than that, Jimbo. You're completely right, but I'd add one more so that you're completely right. Your profits are subjective to the market, not your bias. Okay? You pick a bias, that doesn't make you a little bit right or very right. The market determines the degree to which you were correct, which is another way of saying the degree to which you're profitable, right? So if you're a bull in the US dollar and the dollar is mostly bullish this year, you'll do very well. But instead, if you're a bull in the US dollar and this year in 2020, the dollar is mostly bearish, you won't do as well. But the thing is, if you're following a strategy, bulls only buy at support. Bears only sell at resistance. So you're only going to put yourself into positions that are appropriate in that moment. You see what I mean? So even if you're wrong, bet you anything you'll make more money than you're making now doing whatever it is that you do. Not you personally, Jim, but the invisible amateur trader that I'm speaking to. Imagine I'm not speaking to any one of you, I'm speaking to all of us, including myself. Right? Okay? So anyways, let's go over here. This is a bullish move. In my analysis, I've said that I want to be a bull. That's cool. I've been a bull more than 6 months. That's cool. So every day, I want to buy down here. Every day, I want to buy down here. Every day. So what did we say yesterday? We were way up here at 64.5. I said, yeah, I need it to come down to 62.5. Do you remember that, guys? One contract, that's $2,000 I would have saved you if you were trading one standard contract. And now it's interesting to buy. Why? Because I'm predicting it's going up? No. I'm not predicting anything. It's just technical analysis. That's the cool thing. I'm not predicting anything. It's just, I think, this might go up because it did here, and it did here, and it probably did down in here. So it's just technical analysis. There's no prediction. We had plan A and plan B, TBM. Let me zoom in. It's still there. I haven't touched these charts. Okay? Plan A, plan B. See the other one? It's perfect. And the way I also know that, right? The way I also know that, TBM, is that's what the pivots were yesterday. So what yesterday, amateurs are doing things like, not amateurs, but let's say most people are looking at things like moving averages and all these types of things to make decisions. And I'm looking at tomorrow. So, we were up here or whatever and whatever it is. Whatever. We're at the buy zone anyways, right? Cool. Gold, we got that breakthrough, but still hasn't. Well, I mean, look, we got to be careful. You need to make decisions here. So there's definitely a top here. So you have to make a decision. Is that your buy or not? This looks pretty accurate. So I don't know what you want to do here, but now on the smaller time frames, what you want to look for is stuff like this, okay? If you're a bull. Now, if you're a bear, I don't think after making a breakout, you should really be considering bearish trades until you're at least back into the old sell zone, okay? So I think it'd be very dangerous. But as a bear, you still kind of have to do your analysis to confirm whether it is returning back to the trade zone. So, again, if you're a bear, these are like the key prices that you're looking at. And really, let me draw one more. And really, this becomes into play in the future if this breaks back down. I'm not saying it will. In fact, it probably won't. But if it suddenly started doing this, you could at least say as a bear, it's no longer bullish. Okay? And you might range trade it again. But right now, I think what most people are stinking is this. Okay? I went down the wrong hole. Okay. So just to refresh where we are in the history of time, this has been moving sideways since June. And we are now just breaching the top. That's interesting, right? So a lot of people might say they're on this time frame and they're like, oh man, it's too late. I should have bought down here. And then if you change it to the daily, it just happened like a millisecond ago, right? So, you know, you have to ask yourself, what is your plan for 2020? Okay, we're here right now. Definitely resistance. But if we breach that, are we on our way here? Are we on our way to 1800? I don't know. You're the expert. Give me 3 reasons why. Okay? Once you get in that habit, you'll do fine as a trader. You'll say, oh, my analysis of gold shows that we'll go from 1550 to 1800. Let me give you 3 fundamental reasons why. Okay? But of course, the clarity of that too is if you know you're a bull, you know you're buying dips, and you know you only buy dips to support. Okay? This is what you do for the rest of 2020. You got that? And really, I should draw it this way, just to really make it super clear. Okay? And you do this over and over and over and over and over and over again. And so now we're making a higher high, so you're gonna write that out. Over and over and over again. So think of that. If you happen to be a bull on gold, I'm not telling you to be a bull, I'm not telling you to be a bear, I'm telling you to make a decision. If you were a bull on gold and your analysis tells you we're going to 1800 in 2020, then you buy pullbacks. So therefore, by definition, you need a higher high. You buy pullbacks to support. That is your job. So now your job is to look for pullbacks and then identify the support, aka the price, the deal. Okay? The deal. And if this is clearly a bullish trend, then what kind of deal do you want to get in? It's like pulling up to a BMW dealership and you're like, yeah, I want to buy a BMW. It was funny, 6 months ago or whenever it was, I was at the BMW dealership looking for a vehicle for my wife. One of my neighbors pulls up. He went to Yale. I'm like, hey man, what's up? He's like, hey, you test driving some cars? Like, yeah, just looking for something for the fam, you know, something modest. And they pull up this thing and it's got like oversized wheels and upgraded everything. And I'm like, what are you going to get? He's like, oh, I just want the X5. I'm like, oh, those are nice. Yeah. So anyways, he's driving around. And I get invited to a party at his house. And I roll up. And I'm like, hey, did you get the X5? He's like, no. And then I roll up in my thing. Like, boom. Now, what the hell were we talking about? I was going to tie that into something good. Like having a plan. I had a plan. Like a pullback, a strategy. Oh, the price. Yeah, it comes down to the price. So why did I buy and he didn't buy? There's always a price. You understand? So like that X5, how much is an X5? 80,000? So if they came out and they're like, it's 50,000, do you think he has 50,000? He probably does. Boom, bought it. Now I paid full price, but they gave me all the M upgrades. So it's got M this and M this and M this and M this and that upgrade and that upgrade and that upgrade. Didn't pay for any of it. So I'm like, okay. So you're like, what's your price? What's going to get you to buy gold? That's how you want to think about it. Oh, is that right, Gregors? Today is the 5th anniversary? Well, namaste. Thank you for bringing that up, Gregors. So what is the price? Think of it. If someone asked you like, hey, so what do you do? Oh, I'm a gold buyer. I buy gold. That's how definitive your answer should be. I buy gold. Okay? So in which mechanism or in which way, which methodology do you buy gold? When on the short run, it's cheap. On the long run, it's going to 1880, right? So like, let's do it this way. If you thought it's going to 1800, oops. Okay? If you thought this is going to 1800, I got to go all the way to the weekly. Okay? If you thought it was going to 1800, okay, so here's your target. We'll do this in red, pinkish. Okay, here's your target for 2020. We're going to 1800. And we're currently at 1567. Is it cheap? Yes. Is it cheap at 1600? Based on your analysis, not in the moment. Is it cheap at 1700? Oops. Yeah, but not in the moment. You see what I mean? Not now, not in the moment, but in the long run, 1600 will be cheap, 1700 will be cheap. But it's not a good deal now. So what is a good deal now? Would you buy it at 1550? Yes, you would. As long as we're not getting a trend that looks like this. So those are the two rules if you think about it, guys. If you see something like this, your technical analysis tells you the uptrend is over and where you might be in serious trouble. So you got to circle the wagons and defend yourself. Okay? But barring all of that, if the pattern is generally up, then all you're doing is buying deals, buy a deal. 1600 is not a good deal today, but in 3 months it might be. Okay? So because you have a job, this is your career, right? You do things like, well, what should I do today? Okay? You can see it actually went a little too far down based on daily pivots. You might want to look at this on a weekly point of view. So let's do this down here. Okay? We don't have congruency, actually. It's funny, I didn't look at it from this point of view. Every swing trader in this group knows that that's a very, very clear counter trend trade. Look at that. That is a very clear counter trend trade. It's probably the best one I've seen in a while. Often that gets us all the way down here. So that's kind of interesting. Right now we're technically above that old range. But this is very interesting. It doesn't have to go down to there, but it certainly could. It certainly could do this, guys. Oops. Okay? It certainly could do this before it goes back up. But if it does that, then game off. Because if it does this part that I'm talking about, then it could go to the bottom of the range. So anyone that took this as a smarty pants, if they're a bear, they sold it ridiculously high, super aggressive, but they're being a smarty pants here. You definitely have permission to try. So now they're running into support, and you see that they're already at break even. They have nothing to lose. But the interesting thing is, if they're right and we break through here, not only like the standard counter trend trade gets you at least here, at least there. If this could actually, based on larger technical analysis, go to the bottom of the range, which we know is a heck of a lot farther down. So some smarty pants might have tried that. But I would still, if I were me, I would still sort of assume this is in play. But that's really interesting. So it's, well, I suppose it's clear if you're a bull. It's clear if you're a bull that we have breached some sort of range here going back 6 months. Okay? So if you are bullish, it's pretty clear like this was a shot and this will probably be another one in the future and so on and so forth. So if you have a bias and that's up, right? Strategy. Buy dips. Or tactics will do, right? You got that? By the way, only 25% of people here right now have clicked the like button. 75% have not taken the courtesy of just clicking the thumbs up. Would you please do that? It's such a little effort on your part. Would you please just even that little thing? It does matter. Please. Thank you. Thank you. I appreciate it. It's very important to our community that that gets done. Okay. Let's go here, Euro USD. Okay, once again, are you a bull or a bear? Okay. Bulls believe it's going to not quite 114. Let's say 113 and a half. How many people believe it'll go up 200 pips? Okay. Then, how many people believe this is going down to 109 and a half? Thank you, Oh the Future. You'll find, at least in my experience, that you guys are likely 50-50. So there's no help like asking other people. This is why I don't listen to other people anymore. Hey, Montana Fishing. Thank you. Hey, Montana, are you coming back? Or are you saying goodbye forever or what? By the way, don't think things like Euro's garbage, it's going down. Don't think like that. Okay? For example, if the US stock market is already significantly overbought after a 30%, right, return in 2019. Also, oh, right on, Montana. Also, we're at the, 11-year bull run? And then all of a sudden there's a spike at the very top. Okay? I'm not saying the stock market's going to crash. What I'm saying is everything is overvalued. Everything has been bought. Apple doubled. Like, what are you going to do now? Buy more Apple? Like, it doesn't make sense to me. So what are you going to do with all this money you made? Right? Think of the retired people of America that had $3 million at the beginning of 2019. Now they have $4 million. Okay? There's an extra $1 million. So anyways, this free money has showed up. So what are you going to do in 2020? Buy more of the stuff you already own? Doesn't make any sense. It's not necessarily a sell now, as pure mathematics is saying, if he's commenting on what I'm saying, but it's more like transfer the wealth, right? Europe is going to look cheap in many cases. Now you go to Switzerland and buy a piece of property in Lake Como. Okay? You know what I mean? Why? Because if you go to Montana to buy a ranch, it's too expensive. Hey, Montana, have ranches with beautiful fly fishing streams, beautiful hunting grounds. Have they gone up in value in the last few years? Probably tripled. So anyways, don't look at things like good or bad. Like, right, that's what religion does, I guess. Don't look at things as good or bad. Everything is relative in Forex. And we want to get like maybe a behavioral finance thing going. So one of the things I was thinking about in 2021 or 2022, I should create a behavioral finance class. I got a lot of ideas for FX Bootcamp. I think I'm going to like really create some hardcore Harvard University level economics courses. So that like you can do the math of some of this stuff, right? But look at it from a behavioral finance point of view. Okay? The euro itself might do very well in 2019, even though, as someone said earlier, the Eurozone economic situation sucks. Yeah, well, it ain't going away either. You're still buying something, but you're still buying an economy of 400 million people. Okay? So if you're a rich American, it's just simply time to buy real estate and property and invest into companies in Europe because they're simply cheaper than investing into companies or buying property in the United States. Montana says, we don't want anyone moving to Montana, especially Californians. Yeah. And then the same thing with Canadians. They're like, oh my God, here comes more Americans. They want to go hunting. Ugh, vulgar. But it's good money. So anyways, just look at it from a behavioral finance point of view. Europe ain't going away. Okay? So maybe it's time to start buying or investing or owning, okay? Especially if you'd made $1 million last year doing nothing. And that really goes back to my comment yesterday about the yellow Lamborghini stuff and what a joke that is. Think of the people that have worked their whole life, saved their money, put it into a retirement account matched by their companies, and now they're retired and they made $1 million last year doing nothing. You know what I mean? That's where you want to get to, guys. So now they got this $1 million. Now they're going to do something stupid with it. Anyways, cool. So what is it that you want to do? You can see it's clear as mud. I could create a trade plan that you would believe one way or the other here. Okay? I think the biggest thing here right now is we started at exactly the monthly M3 at a take profit. Okay? So I think in the shorter run, it still looks more this way. But I think on the longer run, whether it's here or next week or next month, I think this is in play. Now, can I justify short-term short but long-term long? Well, for example, if the Fed is done cutting, if we don't have to worry about the Fed anymore, US dollar is going to weaken. Why? Because it's my opinion. And you'll say, well, Wayne, every college course on the planet disagrees with that. And almost every analyst on CNBC and Bloomberg says the opposite of that. And I'll say, yeah, I know. It's my opinion. It's my opinion. That's what I think. Okay? But remember, when you're a professional money manager, people are going to pay you for your opinion. And no matter how ridiculous your opinion is, you will find people that will follow that. But it's the ones that don't have opinions or just quote idiots on TV that don't do well. Okay? Now, Montana says, hey, the U.S. economy is overdue for a correction. Don't think that way. Don't think that way. Turn the TV off, Montana. Turn it off. Don't listen to them. Right now, we're at full employment. When was the last time that happened? World War II, when the government hired everybody they could. Okay? Zero inflation. It's not quite true, but okay? Low interest rates. So I know that's not quite true. Okay? So think of it. Everyone has a job, which means there's income. Income, what do you do with income? It turns into spending, which becomes someone else's income. Okay? And you will keep spending as long as you have a job that you feel comfortable with. Okay? And you own assets like maybe you own a home, maybe you own the stock market, but we call this the wealth effect. Okay? And you're like, well, the interest on my credit card is low. The interest on my car loan is low. The interest on my mortgage is low. I own all these assets. I feel wealthy. So I spend, which becomes someone else's income. So now they have a good job. And because interest rates are low, they can get a cheap credit card. They can get a cheap home loan. They can get a cheap car loan. And so now they spend that money, which becomes someone else's income. So why would the stock market fall? Okay? And if the Fed is no longer buying every bond on the planet, there's no reason to be in bonds. So where are you going to put your money, son? Not in bonds. The Fed's not driving up a bull market anymore. It's over. The bull run is over. They're going to buy stock. Now, what I'm saying is if the S&P 500, let's say, is expensive, then investors, particularly institutional investors, they'll start looking other places. So what they'll do is Apple stock, right, doubled. So what they'll do is they'll take some of their Apple stock, which is doubled. So they doubled their money. So half the money is free. Plus they got to get out of this position based on their disclosure documents. So what they do is they sell Apple to a bunch of dentists and lawyers that think that they're smart. So someone bought Apple at 80 and they're going to sell it to somebody for 200. Not all of it, just some of it. And now what are they going to do with that cash? Buy the S&P 500? But it's already overvalued. So now they might look at European stocks, European banks, European import-export companies, transportation companies, auto companies, stuff like that. Okay? Okay? Cool. So anyways, I can justify this any way you want and it'll work out. So you need to decide. So for example, on the bearish side, here's a monthly sell, here's a weekly sell. Okay? Did bears sell where they were supposed to? Yes or no? It's not a yes or no on the future. Yeah. So we know there are bears in this market. Cool. So where would the bulls buy? Well, we know there's bulls at 111. And there's supposed to be bulls around here. So you need to make decisions. Is this on the short run more bearish than bullish? Or are you going to buy this dip at support? What if it drops to monthly or weekly S1, monthly M2? Okay? Make your decisions. CAD yen, pound yen, Kiwi Swissy. Still chugging along the Kiwi Swissy, right? So here's my my sell. Oops, I didn't want that. Delete. No, didn't want that either. Delete, delete. This is what I wanted. All right, here's my sell. Nice, right? Oops. So what should I do here? Looks all right now, doesn't it? But we're definitely coming up into support. So the next thing to likely happen now is this and then this. So what is this, 125 pip profit so far? Michael just got out of it. That makes sense. Why would Euro be seasonally strong this week, MC14? The only thing I said that would be seasonally strong is yen, Swiss franc, and maybe US dollar. But I never said anything about euro. Oh, Greg made his first move. Let's take a look at that. Greg made his first monthly swing. Cool. Well, Greg, you better be in the swing trading group. MC14 checked a seasonal chart. MC14, can you email me your seasonal chart? I'd like to look at it. Yeah, Gregor's a swing trader. Oh, yeah, you caught that? Knuckles, Gregor. Boom. Look at that. Look at you, buddy. Oh, my God. That's pretty. Look at that. Did you nail it like perfect? Did you get a perfect? No, it's a range, not a counter trend. But did you nail it? Are you in at like 68? Tell me you got it at 68 and some change. Pretty. Yep, right from the right on. Love it. Love it. That's cool. That's your first one, huh? How long have you been a swing trader? How long have you been in the swing trading group? Russell, that's the easiest question in the world. It's right there. You should see it. There's never a question if you have a trade plan. Three months or so. That's not bad. Because you only get one shot per month, right? On your monthly. So good job. 100 days. There you are in 100 days, man. That's cool. Yeah. Yeah, so the very, very simple plan, the most simple of plans is here to here. You played a textbook. Good job. Seriously, nice. Cool. I think Aussie might also be the first one to rebound. Just because a China deal signed finally with the United States, and then the Chinese stimulus, I think will positively impact Aussie. And that when other people get on that clue train, they'll buy the dip, so to speak. So like, it might be interesting around February or March, maybe February, to buy it down here at 65 and then sit on it for 6 years. Dollar peso, yeah, we need to do some exotics. So let's move over to the exotics. Well, let's do the yens first and then the exotics. Please remind me in a bit. Okay. All right. Euro yen. I shorted here. Is that nice? So I got to add, insert, shapes, ellipse. So that's where I'm short. The second one, move my stop a little closer. Cool. And the challenge is going to be here is going to be the big challenge. Okay. Okay. Pound yen. Still moving. So I'm short at 144, not quite, about 144. We're We're at 142. So still only a couple hundred pips. So it's just kind of, it's not really doing anything. Okay, so we'll see if she can make a lower low. You can see on the day trading setup that it's still trending quite well, but maybe whatever. I ain't going to do anything. I'm not going to add. I'm not going to subtract. Kiwi yen. This is our trade plan from yesterday. Do you guys remember? Trade plan yesterday, we were down here. Do you remember? And I said our job was to have it come back. Now, this analysis we did last week. So this goes all the way back to Friday. We had, oops, I wanted this in blue. We had 1, 2, 3 reasons to sell. Do you guys remember all this? How many people remember doing this Friday and Monday? Okay? I'm asking you a very serious question. I know you know the answer. I need you to emotionally type it out. I'm speaking to a very primitive part of your mind. Your intellectual part of your mind will always justify everything. Oh, yeah. Oh, but that's this. Oh, yeah, but that's that. No, I'm appealing to an emotional part of your brain, so I need you to reach out and type, yes, I remember. You told me on Friday what to do. You told me on Monday what to do. Here it is Tuesday, and now I need to appeal to your emotional side of your brain, not your intellectual part. Okay? You don't learn intellectually. It's an interesting point. You don't learn intellectually, you learn emotionally. Okay? So now, price came in, dead center of our analysis, and now is here. So I am short, based on our trade plan together, 2 days ago, based on last week's analysis, I'm short at 72.5, and we're now at 71.80, so I'm up 70 pips. See? Stop loss is already at break even. Now can I get a like? There's almost 80 people in the room right now that have not clicked the like button. 80 people. If you're one of those 80 people, what would your mother think right now? That you're here learning, participating, but you're not willing to click a like button because it's too difficult? Come on. Kick down, come clean, don't be a holdout machine. Okay, let me try it a different way. Please, would you please click the like button? Please, I need you to click the like button so much. I need you to click, please. All right, come on, dude. Click that like button. How dare you not click that like button? Come on. No, seriously. Click the like button. Click it. All right, cool. Thank you. So there's that one. So there's 2 more trades since yesterday. This one, I never got the pullback. It's still just there. So delete. So my first sell is here, but I have not been able to catch a pullback because it's too bearish. So I don't know if you have a learning process there, or maybe you question why, Wayne, why wouldn't you sell it if it's too bearish? I don't know, but let's put it this way. I think I got the easy money, the low-hanging fruit right here. And this other stuff is chasing. I'm just not getting the deals. So remember like the example of the BMW? My friend, he my Yale friend, didn't buy an X5 because he's from Yale. I bought the BMW. I got a better deal, or at least enough to knock me down and say, that's what I'm looking for. I know I'm a buyer. I'm going to buy something. I want to buy something nice, but give me a deal. And they're like, well, we'll give you this, 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 this. We'll give you the better body kit, the upgraded grille, the updated interior, the upgraded trim, the updated body, the updated wheels, the $5,000 upgraded seats. And you're like, okay, I'll buy it. Done. I got the deal I was looking for. In this situation, right? I'm a buyer of yen, not of Aussie. I'm a buyer of yen, but I didn't get the deal. That's all. Okay? Because remember, I have to sell high. Well, this wasn't quite high enough. This wasn't quite high enough. So I sold up here. Well, that's nice and high. Down here, not high enough. Down here, not high enough. So I just didn't get the deal. Because don't look at it as Aussie falling. Look at it as yen going up. Yen is getting more expensive, and I didn't get the deal I needed. So I got Yaled out of this one. Now, bear in mind, my Yale friend, I think, has got school loans. Yeah, he's 40-something, has school loans. So he can't afford it. Hey, it's not his fault. Okay? Okay. Currency Trader says, on daily pivots, it was a good deal. Yeah, but I supersede. Okay? I start on the high time frames, not the low time frames. So it might be a deal on the daily, but if it sucks on the weekly and the monthly, I'm not willing to take it. I'm so scared of making a bad trade that I only make good trades. I don't know if that's the right language, but on the long run, yeah, well, I don't want to make an aggressive trade, say, okay, it's not good on a weekly, it's not good on a monthly, but on a daily it is, so I'm going to take it. I don't want to lose money there because now it's going to take away from my good money. Okay? So in the back of my mind, one of the courses I'm working on is to show you that I can teach you how to make more money by trading less. And that might be a good example, so thank you for bringing that up. A beautiful trade on the daily might suck. On the long run, maybe you make money here, but if you sell out of position over and over and over again, think of it that way. If you sell where it's okay on the daily or even great on the daily, but everything else, it's not that good, on the long run, if you did it 1,000 times, is it going to work the majority of the time for you or not work the majority of the time for you? And of course, I don't have 1,000 to analyze that, but my feeling of doing this for a very long time is that on the long run, you will lose money. You'll have to give up today to protect your year. And I'll tell you what, another 30 pip winner won't change things much, but if you have a lot of 30 pip losers because you traded out of position, it really adds up. You're really taking away from your long run profitability. Does that make sense? Cool. Yeah. Like, think of it really, truly from a professional point of view. You're not trying to get rich today. You're just doing your job. So just do your job. Boy, that ain't fitting on your screen, is it? Oh, now I just filled up my whole screen. A pro trader, your worst month should be no more than 5 or 10%. 10% is a really bad month. 5% is a bad month, but it happens from time to time. 50%, you're dead in the water. For example, that should be absolutely, totally impossible to happen. And now, even though you've made that mistake, now you have to double your account to get back to break even. But people that get down 50%, they don't make 100% returns. So the calendar still hasn't updated, but you're saying 55? Cool. All right, I want to move over to exotics. We had a couple of questions about exotics. What was the question here? The question had to do with peso, I think. Okay. So let's double check where we are here. Let's go to weekly. Actually, you know what? Let's do monthly. So I'm a flow trader on this one. Okay. And I can't even consider selling this until we're at 19. I won't even think about it. And by 19, I really mean 1910, 1911, right? So this is my sell zone right here. So I can't do anything right now. See my clarity? I can only sell. My first price is 1911. Then the second price is 1927. So not now. Ron says, start finding out why your entries are wrong. Actually, I disagree with that, Ron. No trader can be down 50%. So that's like a ginormous red flag. So the first thing I would say is you need to significantly cut your lot size. Okay? Then the second thing you need to do is analyze why your risk management sucks so bad. Now you might get upset with me. Wayne, don't talk to me that way. No, you're the one down 50%. So I need to appeal to you emotionally because for some reason you rationalize 50%. And you're rationalizing it with like, oh, I only have $300. Well, maybe there's a relationship, right? You're willing to be down 50% because you don't have a lot of money. So we need to change the way you think, right? We need to change that. It's absolutely unacceptable, completely and ridiculously unacceptable to be down 50%. And you need to freak out instead of justify it. How is that even possible? That you can be down 10%, and then 20%, and then 30%, and then 40%. Like so I would look at that first, okay, pro trader. How the hell did that happen? It's clearly a risk management issue. Okay? And you need to look at that. And you need to stop whatever behavior that puts you into that situation, right? You need to change your behavior. That is completely unacceptable. Like I said, if you have a -5 for a month, that's not a good month. That's a bad month. But you can recover from that. 50, you're over. Well, one of the issues I hear in this situation is like, I'm poor, I only have $300, so it's okay to be down 50%. No, of course it's not. And then, of course, if you only have $300, what I would do is, right, I would take a second job. Okay? I would attend this webinar every day. I would take notes, and I would practice on my demo account as seriously as possible. Meanwhile, you can save at least $300 a month. I'm hoping. I don't know where you live or what you make, but you save money, and over the course of the year, you'll become a very, very good trader, at least seriously improved trader, and you'll be bankrolled with better money. Not so you can take larger lot sizes, but instead have smaller risk, because you still might be a micro lot trader in a year, but at least you won't have $300. Maybe you have $800 or $3,000 or something, and now your risk is significantly less. But my concern for a lot of people is when I say take a second job, save all that money, and then work really hard on a demo account for a year, you just immediately throw that away. And I think it's that attitude that is going to prevent you from achieving your destiny. Okay? You have to have half a brain and a ridiculous, sickening work ethic. If you come to me and you're a genius, but you got to get rich quick, it ain't going to happen. It's not going to happen. There's only one way to do it. Okay? And I have a friend that is very, 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 very smart. Actually, I have lots of friends, no joke, that are like ridiculously smart. But this particular guy, after graduating from Johns Hopkins University with like a PhD in engineering or something, he was most known for building the foundations to nuclear power plants, right? And I thought it was really cool. His first job out of college, he got hired by a company, an engineering company that was retrofitting a skyscraper in downtown San Francisco or something. And he shows up and they're like, yeah, we need one number from you. And he's like, cool, what do you need? How much does this building weigh? And he told me later on, he's like, it's actually really easy. There's formulas for it. But I'm like, I just love that idea. Like, how do you weigh a skyscraper? But long story short, he did something very unique. And he did this a lot, apparently. He'd go skiing in Lake Tahoe, which is about 4-hour drive from San Francisco. And you're in the beautiful mountains, South Lake Tahoe. And at the foot of these mountains were casinos. And being a smart and intelligent person, he would double park his car on the street in front of the casino. Right? He'd walk up to, I don't know what table it was, blackjack? I don't know what he played, but he'd walk up to the table. He'd drop $1,000. If he won, his vacation, he's going to live like a king. If he loses, he's going to go on the cheap. So he would throw it down, one shot, one kill, and then grab the money, run back out. He had to hop a fence and everything. Hop the fence to get back onto the street to get in the car before they tow his car away. In and out like 4 minutes. So if you need to get rich quick, that's the only way to do it. Put big money on one trade and hope the hell it works. But that's not a business, is it? Okay? So as Michael says, it's much better starting out with 3,600 after 1 year than starting with 300. Especially when you're starting with 300, you don't know what you're doing, and you're taking giant risks. Like it makes no logical sense. It makes no logical sense. There's nothing intellectual about it. You're pure emotional. Yeah, AMFX says, a lot of strange people. It's true. A lot of my friends are very strange and very smart. Like I remember in the 90s when I was in university, I lived with a bunch of smart people, and I came home because I took most of my classes at night because I did some other things during the day. But anyways, I came home one night and there's about 30 people. It looked like a rugby match where 30 people all leaning over this giant round table, and they apparently had been there for an hour and a half trying to solve a math problem. Okay? So a friend of mine, a good friend of mine, in fact, he was a roommate with me at one time, or at that time, he showed up after work. He wasn't a student. He had just recently graduated and was doing an internship. And anyway, so he came back and we're getting our food. I'm like, hey man, what's up? And he's like, I'm good. And then he's like, hey, what are those guys over there? What are they doing? I said, oh, apparently they're working on a math problem. So he walks over and he's eating his food. He's standing there and he's eating his food, holding his plate up. And he's looking at them and he's looking over their shoulder. And then he's like, hey, do you mind? And they're like, what? And he pushes them out of the way, grabs a pencil and goes, zip, 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 solved it, and went back to finishing his dinner. Okay? Nice. Another friend of mine was working at a startup, and a whole project team of engineers was working on this product. And it was to be launched on a certain day, and months go by, and then weeks go by, months go, but now it's coming up. Like apparently they're going into it's going to be all launched on Monday, and on Friday the engineering team is getting screamed at by the CEO and the VP of engineering. They can't get it to work, and their venture capitalists won't fund them if they can't get this work. Their clients are going to be mad and like, oh my God, the company's going to be shut down. So my friend, he goes over and he's like, just give it to me. I'll do it this weekend. I'm not joking. These are all true stories, by the way. So he takes a laptop and all their code, millions of lines of code or whatever it was, and like a whole team of 20 engineers couldn't figure this out. And they've been working on trying to figure it out for weeks. He took it home. By Sunday afternoon, it was fixed. He's like, yeah, I'll fix it. Right? Yeah. Yeah. I'm not joking. Brilliant friends. So I grew up sort of in an environment where I'm not that smart. These are not stories of my brilliance. These are stories of my brilliant friends. So to compensate so I can hang with these guys, as I just had to be a harder worker. And it's always been my secret. I was thinking about this actually in a meditation yesterday or the day before. Who was my first mentor? I believe it was farmers. It wasn't an actual person. There wasn't an actual one person. But I grew up in rural Saskatchewan, wheat farms, wheat and barley and rye. I've actually stood on earth, looked in all directions, and was the tallest thing on the planet. There wasn't a tree as far as I can see in any directions. It was like standing on a rowboat in the middle of the ocean. And you're like, you are the biggest thing on planet Earth. That's where I come from. However, I understand the work that it takes to farm. It's insanely difficult. It takes a lot of time. It takes a lot of effort. You have to get up early. You have to stay late. It's constant. It's relentless. So I think my first mentor was the work ethic of rural Canadian farmers. So that's how I compete. You don't have to be brilliant. In fact, I think if you're brilliant, it might screw you up. Maybe if you're brilliant, you should go work for a big bank somewhere and work in their basement in the dungeons, cranking out, blockchain code. Okay, we're entrepreneurs here. Most of us aren't brilliant, otherwise we'd have PhDs and we'd have fabulous jobs making tons of money, right? So we're entrepreneurs. Can you be stupid? No. No, if you're an idiot, there's no hope. Right? I can't fix that. You understand? Like if you're an idiot, I can't fix that. I'm sorry. There's nothing I can do. It's hopeless. But if you're not an idiot and you have a work ethic, like I always say, a ridiculous, sickening work ethic, and that makes you coachable, yeah, that I can work with all day. Saffron says, a binary options trader, learned from him for 5 months and later found out he was a scammer and got money from Olymp to trade to advert. Interesting. A scammer. The interesting thing about binaries is that if you're scalping with binaries, they're great. Okay? Binaries for scalping are great. Binaries for hedging is great. But if you look at the math of the binary, you pony up $100, and if you're right, you make 75. I think that's about correct, isn't it? So what do we know about this? What do we know about this right off the bat? Yeah, the risk reward stinks. And here's what I teach you. If you're smart enough to know, let's say, euro dollar is going to fall. So this is the trade, right? You're like, oh, I'll risk $100 to make 75 on euro USD. But I'm telling you, if you're smart enough to know this, you're worth at least this, maybe this, depending where you are in this cycle of the trend, right? For example, you could be here, you could be here, or you could be here. So I don't know how many pips you're worth. Like, I know this isn't Euro USD, but let's say this is 300 pips. This is 200 pips, let's say, and let's say this is 100 pips on a Euro USD. Like, I don't know if it's worth this much, or this month. That's determined by the market. But if you're smart enough to know here that it's going to go down, why would you only make 75? You know what I mean? You should be in it for the long run, right? So you can never let your winners run. What's the other problem with binary? Does anyone know? Like, it does make it bad. And I know binary options have a bad rap now. Apparently there were a lot of scam artists. I don't know what the scams were, but apparently there was. But I don't see anything evil with binary options. I kind of like them. Time limit? No. No, we all have time limits. You don't earn any interest. Okay? Remember, I want to teach you how to be a hedge fund manager. I want you to earn ridiculous amounts of money with income. You can't let your winners run. You risk more than you are rewarded, and you don't get any income. So there's a lot of things that don't really work well there. But if you're using it to hedge, great. Which options were designed for hedging? They were not designed for speculation. They were designed to hedge. So a binary option to hedge your cash position. I did a video on that many years ago. Okay. And for scalping the news, that's cool too. Because you're not going to get jacked by spreads and volatility. See, what binary options do is they remove volatility. Okay? So for example, you sell a binary option here, right? Sell a BO. What happens to you if the market then suddenly does this? Nothing. Nothing changes. Nothing changes. You're like, oh, winner, winner, chicken dinner. Done. But you only made 75 pips even though it moved 150. Okay? Yeah, on Nadex. I don't know if it's true anymore, but I used to be a registered money manager at Nadex. The interesting thing is the company that preceded Nadex, the original startup, used to be right next to my house where I lived in California, Redwood Shores, California, right near Oracle. I think they were over by the Whole Foods. And if anyone knows the area, it's Templeton, I think, is over there. And the Whole Foods, if you know where the Templeton is. And then there's a Pete's Coffee. I wrote half my book at that Pete's Coffee. It's not actually Redwood Shores. That's farther up. It's not San Mateo, but it's out in that direction if you know the area. Okay. That Pete's Coffee, I remember thinking about it like, what, right? What do these are not sell zones. What are they? I'm like, that's not right. And I remember thinking about it while drinking my Pete's coffee. I'm like, well, what I want these to do is show, like, if I'm a buyer here, these are my targets. So what would I call that? And I remember thinking about it. Well, the target is where you take profit. So we're going to call these pivot profit zones. Because it doesn't have to be exactly this price or exactly this price, anywhere in here. So I came up with that name, pivot profit zones, at that Pete's Coffee. Cool, huh? Nobody knows that part of Northern California? Okay. So there's that. Some of you guys asked about Turkish lira. It's just sort of farting around. I'll feel a lot more comfortable, as I said yesterday, once we're below this level. Okay. So there's not much for me to do while we're elevated here. But if we start doing this, then I might add to it. Okay. But not while we're in the range. So right now I'm going to identify the range is kind of like this area here. As long as we're in there, I'm sort of neutral. But if we break out, maybe after NFP, I'll move this down if it's still risk on. Yeah, well, for that, Javier, I want to start a book club. I already own the URL. So I'll start a book club. And I think after a year or two of being in the book club, you guys will know more about economics than most professional economists. Okay? Yeah. So I've said it before, but we'll probably start with Machiavelli and then maybe read a book on game theory based on Machiavelli. And then Ricardo. Do you guys know Ricardo? Oscar says, have I ever met Jim Rogers in person? I've been in the same room as Jim Rogers, but, we didn't hang out or anything. So I'd probably do Ricardo, but I was thinking, as soon as I said Ricardo, one of the things I talked about in the past is doing a real estate course. And I would definitely start out with Ricardo. And Ricardo goes all the way back to the English Civil War and the Corn Laws. Does anybody have a year on that? The English Civil War? I think it's funny, right? The English Civil War and the Corn Laws. Oh, I think I'm getting the years correct. Ricardo Corn Laws? No, I've lost everyone. Like Adam Smith, Ricardo was an opponent of protectionism for a nation. Okay, especially in agriculture. He believed that the British Corn Law tariffs against agriculture ensured the less productive domestic land would harvest be. Yeah. All right. So this is exactly why I'd start with this. Think of this, guys. Tariffs on agricultural products ensured that less productive domestic land. By the way, do we want less productive land or more productive land? So right off the bat, you can see he's a capitalist, right? He's a capitalist. He says the government's getting involved and placing tariffs. And by the way, corn means everything. Corn doesn't mean corn. Maize is corn. Corn means all grain. So this is wheat and barley and oats and maize and okay? They're all categorized as corn. Okay? So anyways, he said the government getting involved to protect the farmers really made less productive domestic land, right? More expensive. Why would land that doesn't produce very much be more expensive? Well, if you owned it, the government was going to give you free money. So if you protect the farmers, you drive up prices, and then all of a sudden, people don't have food. There's a grain shortage. Why? You're paying people to not do anything. So anyways, we could go through, like, wouldn't it be great? So Adam Smith was a generation before Ricardo, right? So Adam Smith's Wealth of Nations was 1776, right? Which I've actually held Adam Smith's Wealth of Nation. I had to have white gloves. I had to get a permit. Pretty neat, right? Do you guys know Ryan at FX Bootcamp Live? I'm sitting there in this rare archives, highly secured library at Harvard. And I'm wearing white gloves. I'm holding Adam Smith's Wealth of Nations. I got a permit to take a picture with my phone, and I texted Ryan, "May check it out. I'm reading the Wealth of Nations." Ah! Straight to Ryan, to the White Wizard of Forex. Yeah. But very cool. Like we would start, like we'd have to read Wealth of Nations, right? So you see what I mean? Like we could do a lot here. I think we could have a lot of fun. So I already have it in my brain that we'd be reading Machiavelli and Adam Smith and Ricardo, so on and so forth. John Locke. Imagine you start there before we start doing like the mathy classes. What if you actually understood where all this came from? So anyways, like I said, the cheapest Harvard education you'll get, right? Just so anyways, we'll get to that someday. So anyways. And then, oh, here's one I did earlier. Okay. What do you think? This is where I'm short. What do you think? Did I do all right? Well, it depends on what happens next, right? If this happens, I'm golden. But I will be challenged here, and I will be challenged here. You know, Raymond, I thought about that today. So one of the things I thought I would do, and this is like, I'm going through a creative period here because A, I'm getting sleep, and B, I'm not at school. So I get all my juices amped up, but I got to be careful because I really don't know my future. But what I was thinking of doing is doing a course on exotics. So like Eurozar is a great example, right? But then I thought, I want to do something cool, not just another training event. Like, because my life is involved, my time is involved, right? Right? So I thought, well, why don't I go to South Africa and teach how to trade exotics, and then do the full event there, but right, and then go to Turkey. I already know the Ritz-Carlton I want to go to. I already know the room I want to rent for my party. We're going to have a nice party there. And a whole bunch of people can meet up with me in Istanbul, Constantinople. And I'll do the same exotics training course there, but now I can put them together and show half of the same, because I'll do the same course, one in South Africa, one in Turkey, but then I'll take the two best halves and put it together into one course. I'm like, right? Here I am in Cape Town, oh my God! Right? And then the other half, live from Istanbul! Right? And we'll do the other half there. Meanwhile, we'll have some parties and we'll tell some drinks. And right? Shetafe! Right? I think it would be fun. And then we got to go to Mexico. Ay, 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 ay. Let's do some peso. Right? So, why not, right? Jim said the Harvard bookshelf. Yeah, so I got them. I've only opened a couple of them. This is the first one. Here, we should do it this way. This is the first one. Full webcam. So it doesn't quite fit in there. Harvard Classic, right? Book number 1. Franklin. Yeah, Benjamin Franklin. Woman and Pen. Right? It's cool, right? Let's see if I can do that. There's Veritas. Remember I was telling you guys about Veritas the other day? You're enlightened through knowledge, so you're Illuminati. Let's see if I can do this backwards. Look, the book's never actually been opened, right? But look, seriously, the book's never even been opened. It doesn't even stay open. I have to hold the pages open. That's what it looks on the inside. Okay, cool, right? But let me show you. Check this out. It won't focus. Why won't it focus? Is that amazing? 110 years old. Sitting above my shelf. But most of them are wrapped like this. They've never seen daylight. They've never seen dust. Isn't that crazy? So you can buy a yellow Lamborghini or you can buy knowledge. Those books are 110 years old, first edition. So when I read like Adam Smith's Wealth of Nations, I could read from that book. But I've held the original book from 1776. Isn't that neat? So anyways, I don't know if any of these ideas are interesting to you, whether you do want to do a book club in a year or two, if you want to meet up with me in Mexico or Turkey or South Africa to do exotics trading and all that kind of stuff. How much were those books? Yeah. Well, can't say. They were actually a gift to me from my wife for my master's degree, which I'm set to receive in May. And they became available at a what do you call a book collector guy store, whatever, up in I think they came out of Seattle. Okay. So anyways, there's a lot of ideas, a lot of juice going right now. Again, because I'm not in school and I'm actually getting some sleep and stuff. But let me sum it down, because some people get overwhelmed. They're like, this guy's nuts. Okay. Let me summarize this. I care about you and I want you to succeed. I know you can do this if you have half a brain and a work ethic. So I need you to believe that this is something that you can do. Now, the next step is, what can I do to help you succeed? That's what's going through my brain. So originally, when I started FX Bootcamp many years ago, 15, 16, 17 years ago, I showed everybody what I did. And then they're like, Wayne, I see you every day, but it's still not enough. You need to document this. So I wrote a book. Okay. And then I also created at the very first Forex Trading Expo, I was a keynote speaker. Isn't that funny? So I'm like, really? So I also took a lot of time to document my trading methodology. So that's where the smart plans came from. So I used to travel around the world on a regular basis, 4, 5, 6, 7 times a year, going everywhere, going on TV, going to conferences, writing in magazines, over and over and over again, telling people this is my methodology. And it's also documented in my book. And I teach people every single day in a live webinar, back when live webinars were new. And I've been doing that for a very long time, and I've helped many people. But the thing is, what more can be done? Because we all have different ways we learn and different modalities, right? Some people like to read, some people like to listen, some people like to watch, some people need to do. So what more can be done? And then, of course, once you start grasping the basics, how can I keep you in that zone and keep you thinking bigger and thinking more professional and give you more truly education, right? Like, you are truly more educated if you can bust out, Machiavelli in a conversation, and then you're like, well, don't even get me started, right? Don't even get me started with Ricardo. And they're like, who's Ricardo? Oh, Ricardo, let me tell you all about Ricardo, right? John Locke, Adam Smith, and so on and so forth. Or if you're oil, right? There's several books you need to read. If you're going to be an expert in oil, there are several books you need to read. Yield curve analysis. We could read books together about that. But also my idea was to bring in some of the authors and talk to them about it and all that kind of stuff. So all I'm saying is, during these periods of sort of downtime for me, I'm trying to think of what more can I do to serve you, to help you succeed. Because when I see people knock down their first incredible monthly swing trade and they do it exactly textbook top to bottom, I know how that feels. Oh, I know. And to me, it's almost the same joy, right? Wow. So what can I do? Right? What can I do is my thought. And how can we have fun doing it? Especially if I'm involved, because I don't have a lot of time and I have to give up a lot. How can I make it worthwhile? So if I can hang with you in Cape Town and do some really cool training, and then at night have a cigar on the beach and a nice glass of South African cab or something, watch the sunset, watch the moon over the waves of Cape Town. And then I'm like, hey man, I want to take off all my clothes and run into the ocean. They're like, not a good idea. I'm like, oh no, we do it all the time. Right? Oh yeah, not a good idea probably. But anyways, and then like zip over to Turkey. Oh my gosh. Right? I want to go and write it off in my taxes, right? So there's a lot that we can do and I can share, but I think we can have a lot of fun and share in the joy of your success, or at least your learning process. Yeah, we're not going to have John Locke. Yeah, but if we brought in, I don't know, somebody. Here's the thing, I've never read a book on Forex. That's not true. I read somebody. But it was inconsequential because I'm like, oh, I know all this stuff. It just reconfirmed I don't need to know anything. But I think it'd be cool to um, talk to the authors, and in particular, there's a lot of people that have moved out of big professional firms and have now gone independent that are writing books. So when they're like, hey man, when I was with, XYZ Bank and we dropped 20B on the euro dollar, I'd like to hear those stories, right? But if it's just some other dude like myself, nah. Right? So we can pick and choose what we want. So I don't know. That's just one idea. Traveling around the world was another one I had either this morning. It might have actually been this morning I came up with that idea. I'm like, wouldn't it be cool to teach exotics from the location of the exotics? Okay? But really, I want to get to the other stuff too. Business formation, fundraising, working with lawyers and accountants and compliance and being regulated. All these interesting things, right? Setting up offshore companies. I think we can have a lot of fun there as well. So, there's so much that needs to be done. There's so much work. I feel like after 15 or 16 or 17 years of doing this, that we're just scratching the surface and there is tons to do. So Kevin Hope says, Jack Schwager, yeah, but his Market Wizard stuff, you can just read on your own. I have books that he wrote on how to, it's not really he wrote books. Well, let's back up even further. Before writing books, he worked as an analyst that would analyze commodity trading advisors, basically hedge fund managers. He would analyze them on behalf of investors. And he would say, based on his analysis, whether investing might be a good idea or a risky idea. Okay? So he was a numbers guy. Think of him not as an author, but like an accountant, bean counter kind of guy. And so I read his books on that. Okay? And you learn things like most traders that have had 3 or 4 or 5 years of good trading, most of the time lose for the next 3 or 4 or 5 years. So that's not how to pick a good trader, looking at their trade history. Okay? And I know because I've invested into 200 traders, each that had good trading history, and they all suck. So that's where I realized I have to train everybody. I have to train everybody. I need to build my own army of hardcore, disciplined traders. Yeah, but see, like, Javier, like if you read Kathy's book and you read my book, it's the same thing pretty much, right? Not that we copied each other, but it's all the basics. I'm talking about like stuff way more important. But like, oh, if oil goes up, you should look at buying the Canadian dollar. Yeah, thanks, babe, right? But I wrote the same crap too. But you have to know that. And for a lot of people, they don't know that. But now we can take it to a way bigger level, right? Way bigger level. So I want to do stuff where I teach you how to raise money. Right? I want you to meet a billionaire and go through the process of building a relationship with a billionaire and having you trade their money. And if you don't actually have that happen, you're capable of doing it, right? You should be able to walk on stage. Hi, my name is Wayne McDonald. I am a currency trader. That's where I want to, right? Okay. So like that stuff's good, but like that's the stuff you should read in the first 6 months. I want to get you to year 10, year 20. I want to change your life. Okay? But you got to be ready. Okay? You got to be ready. You got to be big. You got to be smart. But let's have some fun too, right? So thank you for just kind of living through this period with me. I share my life with you on YouTube every day. You show up and you give to me. So thank you for being in my life. Thank you for being a part of this community. Please show that it matters to you by subscribing, by liking, by leaving comments, and by opening an account at tradersway.com. And I will see you tomorrow. And let me know, would you go to any of these things? Like, what do you like? Do you like the book club idea? Do you want to meet up in Turkey with me? Like, what's up, dog? Let me know. I'll put it in the comments below, all right? Not in the chat. Put it in the comments below the video. Thanks, y'all.